Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Alright, so before we get to trade for our markets this morning, let's take a look at how the Asian markets are faring. Remember, the Japanese as well as the Chinese markets are shut. Japanese on account of the Showa Day, as well as the Chinese markets on account of day 1 of the Labor Day. Tomorrow is day 2, so 2 days of holiday on the Chinese market. So barring that, we have the Korean markets. They're trading with gains for close to about 0.3%, primarily on account of one, lack of liquidity in other markets, as well as secondly, the historic peace deal that was signed over the weekend. So some gains extended for the Korean markets. Chinese PMI data was released a short while back. The manufacturing PMI came in at close to 51.4, while the services PMI came in at 54. So we have the Japanese markets as well as the Chinese indices shut. We're seeing a bit of gains come by in the Straits Index. Taiwanese, of course, is absolutely flat. The SGX Nifty, if you take a look at it, for starters, indicates that we may see a gain of almost 20 points. We'll wait and watch how that pans out, given the volumes in the Indian markets are likely to be less as well because of the bank holiday.
Okay, that's right. One thing to point out as far as the Indian market is concerned, but in the US markets, the Wall Street ended mixed on Friday. The Nasdaq ended flat as technology shares lost steam that we saw in the first half of trade. It was the shares like Apple, Netflix and Alphabet that really pulled back in trade. As a result, the Dow was around 11 points lower, while the S&P 500 rose around 0.1% to end close to the 2670 mark. In economic news, the US economy grew by 2.3% in the first quarter, against an expectation of 2%. CNBC Steve Leesman reports on the same.
Not only was it better than the estimate, but we've had that weak Q1 effect. This is a decline from the fourth quarter, but the key is that it's still right around trend. And there's an expectation, I don't know if that expectation is going to change, of a pretty strong rebound in the second quarter. So we went into this number with a 2% estimate for the first quarter, and the rapid update, the CNBC rapid update forecast for the second quarter is 3.5. So that's a pretty good bounce back. And I think it keeps us on track for that another 3 that's important out there, which is 3% GDP. And I have a couple charts, I don't know if they're available here, to show you about the weakness of the first quarter that we've chronicled over the past couple years. There's one of them. There's real GDP, and there's that 2.3 number with the estimate of the bounce back next quarter. I suspect that may come down a little bit for this quarter, in part because you had something of an inventory build back up in the first quarter here. So that may come down for the second quarter. But take a look at the next chart. You can see that Q1 weak effect going back to 2009. And what you see is that Q1 has been running well short on average. And the next chart will show you what that average has been. Growth has averaged 2.2%, and very few quarters have actually hit that. Very few first quarters have hit that. So we're going to take this with a grain of salt. Some of the economists out there, like Ian Shepperson, said he would add almost a full percentage point to this number to take account for those seasonal effects in the first quarter. So it's a pretty good number, I think, all things considered. A bit of a slowdown from the fourth quarter. You had hurricane spending that came off of the rolls, and then you start the second quarter. There's that number right there. I want to show you that chart. That green line is average growth over the period of 09 to 17, and you can see where the first quarters have been pretty perennially below, except for right now. We did have a nice bounce back. Q1 18, 2.3%, one of the better first quarters we've had.
All right, of all the S&P 500 companies that have reported numbers so far, 79.4% have beat estimates on the bottom line. So we'll keep an eye out on that. Let's hear out what market experts have to say about how the earnings season has panned out and the road ahead for the US markets itself.
I think we've had 6 straight years of PE expansion and earnings going up, so it's been easy. This year, we have amazing earnings, but we have a headwind called PE pressure. And that comes because rates are drifting higher, inflation's a little higher, and volatility's up. So it's a tug of war. I think at the end of the day, earnings win, but I think stocks will be up less than earnings this year. 2,800 is not that far away from where we are.
The market's probably sniffing out a little bit of inflation, but I don't know if we're really at that danger zone where the Fed's going to have to hike too quickly. That's sort of where we see things coming in right now. If you look at CapEx trends, U.S. companies are actually spending their money that they made from tax reform on CapEx. We've been tracking this, and CapEx guidance is above average.
This is an extraordinary earnings season. We've got 82% of companies beating expectations. That is way above what we normally get. it looks like the first quarter is going to be up 28% year over year in operating earnings. I think the only negative is this is about as good as it gets. And we've just got to learn to live with as good as it gets. What's happened is we've had 5 years of earnings growth telescoped into 2018 here. So I think the level of earnings is excellent here. And I think for a while, it's hard to see future earnings growth in 2019, 2020. But the amount of cash these companies are earning, I think people ought to be comfortable investing in equities. I just think they're having a hard time doing that. But I think the earnings numbers are extremely good.
Because the Fed was raising rates and we had liquidity growth receding, had a much bigger impact on the multiple than what the earnings impact had on the overall stock market. So I'm not going to debate whether or not the earnings landscape is good. It is, but it's really looking at the situation in the rearview mirror. The general level of interest rates are on the rise. And late cycle, that spells to me a market at best that's just going to do what it's already been doing, heightened volatility, and just trading in a range.
All right, so let's also take a look of what happened in the European markets out there. They closed higher on Friday. Investors monitored another batch of corporate earnings coming by. Technology stocks led the gains, led by Capgemini. Banks were a slight disappointment, and while consumer durables doing fairly well in India, not doing so well in the European region because Electrolux, that one disappointed on numbers. That stock was off by about 11%. The FTSE, key gainer out there with a gain of about 1%. But if you take a look at the peripheral indices, there were modest gains across. The ATEX actually outperformed with about 1.6% gains there. But if you take a look at the Italian index, that one was in the red, led lower by Fiat, which was down about 3%. If you take a look at the emerging market space, then good cues coming in from the Russian market. So the Russian index was up about 1.5%, absolutely flat for the Brazilian markets.
Okay, let's shift focus to the currency space now. The dollar holds steady despite a government report showing slower first quarter economic growth. The US dollar has depicted its best weekly performance since November, having gained around 1.4% in the past week itself.
The world of commodities, oil prices edged lower amid concerns that the US would reimpose sanctions on Iran.
Okay, on that note, let's slip into a quick break. Come back, we'll discuss all the cues and news you need to know for the trade this Monday morning. Stay tuned. Well, back home on the Wall Street, the market surged on first day of the new series, ending at 2-month closing highs. Nifty ended just shy of the 10,700 mark, while the Sensex 2 is 31 points short of the 35,000 mark. Now, banks were the star performers of trade on Friday, especially Axis Bank that gained around 7-8%. The mid-caps too rallied 0.7% and regained that 20,000 mark. But how the cues stacked up for the day? Nigel joins us early this morning with all the cues. Nigel, good morning. Over to you.
Well, good morning. In fact, things have looked so good for the bulls. Last week, the Nifty was up 130 points. In the last month, a little more than that, the Nifty is up close to around 694 points. So we've had a superb rally. In Friday's trading session, the FIs, they were sellers yet again. They sold roughly around 750 crores odd. The DIs, they did their bit. They pumped in some money close to 650 crores. But putting those numbers together, you'll see the institutions were net sellers, in fact. The FIs, they've been on a selling spree, actually. They've sold close to around $1 billion in the last 11 trading sessions and been selling non-stop. It's been an unbeaten streak in terms of selling, but that doesn't really matter. The DIs, they are putting their money. They're putting in close to around 8,500 crores in April 2018 itself. Indications that we get in a live market are the premium on the futures, and that doubled in Friday's trading session, telling you that yes, there were bullish bets being taken. So the FIs, they're selling in the cash market, but very bullish signs coming in from the futures and option space. On the index futures, they added close to around 4 longs for every 1 short. In terms of calls, they bought more calls than puts, so that as well is a positive. They bought close to around 5 calls for 2 puts bought. But very importantly is who are the writers, and they were writing puts yet again. So that's telling you that we're getting very bullish cues coming in from the derivatives market. So we'll keep an eye out on that front. Today, I think volumes will be a tad bit lower because we have a truncated weekend. So, a lot of people would have headed out for a holiday. Wish we could do that, but any which ways, we'll be here. So, we'll have to keep an eye out on volumes. Those strikes are pretty important. Now, on the upside, that's the level we're looking at. That's around the 11,000 call. On the downside, 10,500 put. That's going to be the crucial mark. Even in Friday's trading session, the 10,500 put, the 10,600 put, both of them were very active. Between them, close to around 15 lakh shares were added. So I'll be looking at that level of around 10,420, 10,450 as a bit of a stop loss for those long traders. Those are the technical levels. We're well above that, so no worries on that front. A couple of stocks, though, that I'll be looking out for today. Maruti ended virtually at the low point of the day. I was reading a couple of brokerages. No real worries over there. You know, you had a forex impact of around 200 crores odd, but otherwise the numbers look pretty good. Everyone's quite bullish on the stock. So let's see whether or not it could bounce back today. Reliance Industries, standard disclosure, owner and producer of the channel that you're currently watching, CNBC TV18. So just keep an eye out on that stock. It came out with a set of numbers, look more or less in line. And big earnings numbers that we're looking out for today, HDFC as well as Kotak Mahindra Bank. So we'll keep an eye out on that front. You know, just to tell you all, over the weekend, I think the bears must be hoping, you know, those guys, the North Korean and South Korean leaders didn't shake hands, or maybe crude went to around 80, 90 or something like that. Nothing like that is really happening. We have crude at $75 per barrel. But the bulls, what a good time they're having.
The bulls are having a wonderful time. Wish we could have that wonderful time as well if it was a holiday. You spoke about the volumes. You know, the banks are shut, so that may also, you know, impede the volumes a little bit. It's Budh Purnima. Wish the equity markets were shut as well. Given the banks are shut, a lot of the Asian markets are shut too.
You know, Mangalam, you love this one. I'm going to be looking out at two sectors today. One is the banks, because it's salary day also. Some of those banks are shut. And also, we'll be looking out at the Nifty Bank. Seriously, we should look out at the Nifty Bank. And the second one, Mangalam, you're going to love. You know, because everyone's in, I think, from our team. But I'll look at the farmer index as well, because a lot of people may not be well today, so they get 4 days on the trot. So keep an eye out on that as well. But let's get serious then. Let's tell you stocks that you should be looking out for in today's trading session. I already told you Kotak Mahindra Bank as well as HDFC. We'll keep an eye out on those stocks because they come out with numbers. Those are some of the mid caps that come out with the set of numbers. From the broader markets, we'll have plenty of numbers that will be out. The other stock that I'll be looking at is Interglobe Aviation. Surprised. Some bad news coming post-market hours. Take a look at the intraday chart of the stock. Oopsie daisy, you know, just, you know, they've accepted the resignation of Mr. Aditya Ghosh, but intraday stock, it's down closer on 6%. Keep an eye out on this stock. Let's see how much of a negative reaction we get, because some part of that could have been priced in Friday's trading session. I'll also look at Jet Airways as well as SpiceJet, because those stocks have lost 20 to 30% from their peak. Interglobe is less than 10% away from the peak. So if they don't like this news too much, then in fact, let's see whether any money moves out or there. Remember, crude prices are moving up, so just keep that in mind as well. Other stocks we're looking at, Idea. The numbers look better than what we were working with. So that stock should get a thumbs up today, should bounce back. Margin expansion is something that the street like. Shree Cement, difficult to call these numbers because we don't have a lot of details, but the margin compression is not as much as expected and the realizations were higher than expected. So that stock I think should open up in the green. LG Balkrishna and Brothers, we'll keep an eye on this stock. We have been highlighting on the channel that two-wheelers have been selling well. So those chains in the two-wheelers will, you know, sell well as well. And the margin expansion of there, something that was good. Revenue growth as well was good. Thyrocare, Ikta tells us the numbers are quite good. Good operating profit growth out there. Shoppers Stop, well, Mangalam is saying that the margins are a little bit better, right? A mild expansion over there. Finance cost as well was low. I was there actually yesterday, helping keeping the wife happy ahead of the weekend. And a couple of other numbers. Automotive Corporation of Goa, Vardhaman, Specialty Steels, we'll keep an eye out on them. Canfin Homes, there we had disbursements at the highest in the last 5 quarters. Loan growth, lowest in the last 7 quarters. Equitas as well, the gross NPS came in lower. PC Jewelers, they are coming out with the buyback. Most important about this buyback, I would like the promoters not to participate over there. If you're serious about that, give your shareholders and regain the confidence. So keep an eye on that one. Vakrangi, well, the resignation of PwC is something that will continue to hurt them. MCX, the numbers looked quite good. And a lot of fundraising plans from a whole host of stocks. Jagran Prakashan, Adani Ports, you have Jayant Agro, Crest Ventures, Vocart, all these guys are looking to raise some money or the other. So all these stocks would be in focus and we'll keep an eye out on them. But otherwise, Monday, let's get through. We have a good holiday coming up tomorrow.
Oh, well, yes, good holiday coming in, and we'll keep an eye out on the pharma index. As
pharma index, very important, because you know, there'll be a lot of people who will be calling up today and saying, I'm well today. You know? But our team is fully in, don't worry.
Well, let's see how that pans out, but let's get in some market opinion on that note from Pramod Gubbi, the head equities at Ambit Capital. Now, he says that global liquidity is the biggest cause of concern for the market. He adds that earnings will drive stocks on a selective basis.
At the index level, I guess, you know, 2018 will remain a year of bottom-up stories rather than at the macro level. There are, you know, far too many risks, far too many uncertainties, starting with liquidity, which is the biggest uncertainty as to how the Fed roll-off pans out as we go through the year. I don't think the macros will provide the tailwind for the market at the index level. But having said that, given you know, the micros are looking good, there will be you know, opportunities to make money from a bottom-up perspective. I think earnings will drive stocks on a selective basis, and often we find that the first half of the earnings season is the better sort as far as earnings numbers are concerned. So we're not surprised by the positivity so far, and as we head towards well into May, we can expect this sort of a buoyancy to sort of moderate.
The big news that came on Friday post-markets was the resignation of Aditya Ghosh. An intraday chart of Indigo will tell you the stock was down 7%. We'll keep an eye out on how it performs today, but we have there are sudden doubts about his resignation. We learned from sources that differences had actually cropped up between Aditya Ghosh and the company's leadership. Ashpreet Sethi has been picking up all these details. She joins us with more. Ashpreet, good morning. What are you picking up?
Yeah, now see, this came as a big shocker as far as Aditya Ghosh stepping down is concerned. But what we pick up from sources is that for past several months, this had been brewing because see the kind of expats that have come on Indigo's board. Now, you see, Wolfgang was taken over from GoAir. He's now the CEO who was got on the board in January. Gregory is also there from advisor. He will be chosen to become the next CEO, while Rahul Bhatia has taken over as the interim CEO. What sources tell us within Indigo is that there were certain spats as far as between Aditya Ghosh and these expats is concerned. They were brought in to oversee how he was performing as the president. So now what remains to be seen is whether Indigo will be focusing more on their long-haul flights, because remember, these expats have been brought in because of their experience of international operations. However, there have been differences, what we pick up from sources as well, as far as Aditya Ghosh dealing with the A320neos, which were grounded. $600 million is the kind of loss that Indigo had borne as far as putting 11 neos on ground is concerned. Also, the Air India saga as to how they went on record saying they want to go ahead and bid for Air India, but later withdrew, saying that they are interested only in international operations. So these are some of the issues which have cropped up. We'll have to wait and see where does Aditya Ghosh head, because the email that was shared or the press release was shared says that he will be looking at going ahead and starting his new venture. Back to you.
Okay, thank you, Ashpreet, for that and getting us all those details. But let's also get in some opinion coming in from Ramdev Agarwal of Motilal Oswal on what Aditya Ghosh's resignation will mean for the company and what it means for the stock impact.
He's the face of Indigo for us, though the co-promoters are different. But we always saw him leading the front. So it's come like a bit of surprise, but it happens in the corporate world. I don't think the future of airline is dependent on one person, though his contribution has been immense. But I think airline is much bigger than a person. So I think market should not have any worry. I mean, I as an investor, I don't have any worry about the future of Indigo per se, because Mr. Ghosh's resignation has been announced. If there is any major decline further, I think a lot of smart investors will look at as a buying opportunity, because I don't think even a percentage of future changes. Management team is very deep, and they have global experience. This is one of the finest global corporation out of India. So I would see it as an opportunity to buy if there is a major correction in the stock.
A major correction should be an opportunity to buy. That's the word coming in from Ramdev Agarwal. But another stock which is on our radar is Fortis. The board has now extended the deadline for the final bids, sets a new deadline for the deal finalization under a strengthened board with 3 independent directors added to that board. Nisha Poddar gets us more details. Nisha, this deal just continues.
Oh yes, but now we have a new set of deadline, and hopefully now there's much more certainty to the deal closure, also under a much more strengthened board with the 3 independent directors nominated by the big shareholders being inducted, Suvalakshmi, Indrajit as well as Ravi Rajgopal. Now, Fortis board, but in a surprise move, has extended the deadline for giving the final revised bids to May 1st. And by May 6th, remember, Manipal TPG will have the right to match the highest offer. And by 10th of May, board, by taking the advisory committee's opinion, will really decide on who the final bidder is. And finally, the EGM will be on 22nd of May. So hopefully, by then, the entire matter will be closed and done and dusted. once and for all. But Munjal Burman, that is one of the 4 bidders in the fray right now, has questioned the extension, and not just the extension, also the right to match that is with the Manipal TPG bidder, because they say that this is not in fair practice and equal opportunity should be given to all. Nonetheless, there are 4 bidders right now in the race for Fortis Healthcare. There is Manipal TPG, there is Munjal Burman, as well as IHH and also Radiant. So these 4 bids have come in. Let's see what revisions really come in.
Okay, thank you, Nisha, for that. We trust you to get us all the updates from this developing story. Let's see whether the company is able to meet its deadline and the timeline or not. But moving on, India's southern states have been pioneers in population control, but southern leaders have shown displeasure to the 15th Finance Commission's term of reference, which has an explicit mention about using the 2011 census data for arriving at resource allocation as against the 1971 census. Now, moving to assuage such fears, Chairman N.K. Singh said the terms of reference does not bar it from using the data from past censuses.
Yes, the terms of reference does say that if we use population in any manner, we should go by the census of 2011, but it does not say that it debars us in any way in using any mix of an earlier census figure, as indeed was done by the last Finance Commission. It does not also entail us to assign any particular weightage to population, as that is entirely an element of a discretion and a judgment which the Finance Commission will really begin to exercise.